transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate.
It was initially the 12% return, but it quickly turned into the people.
All right, welcome to another episode of our podcast. I'm Jamison Manwaring, CEO of Neighborhood Ventures, and I have a great panel with me today. Heidi Butler, who is Director of Finance at Neighborhood Ventures, and Bart Dill, Director of Investor Relations. So we're constantly talking to investors. We're seeing so many things in the multifamily market, including all the assets that we have and are managing. So we're excited to jump into some of the major things that we've been seeing the last few weeks when it comes to multifamily, in particular multifamily in the Southwest and Arizona. We're going to jump in with some major things that continue to happen in Arizona. Intel awarded $8.5 billion in CHIPS Act grants. Intel is the other large semiconductor company that's based here in the valley. They're kind of in the south side of the valley. TSMC, Taiwan Semiconductors, on the north side of the valley. And total federal commitments could top $40 billion for Intel and their work that's happening here.
Sheesh.
This is after the TSMC plant, which is north of the valley in North Phoenix, is also doing a $40 billion plant there. So Arizona is becoming the place for chips in the U.S. as this onshoring continues to come post-COVID, where we want to have more production, more manufacturing onshore, and Arizona is becoming a big beneficiary of that. The U.S. Department of Commerce, in part of this $8.5 billion grant package, is also giving another $11 billion in loans, plus tax credits. In total, it could be as much as $100 billion in qualified investments that are linked to the CHIPS Act and bringing chips production onshore. So this continues to be a major development for Arizona. All told, Intel's federal award package could support 30,000 new jobs, including 3,000 manufacturing and 6,000 construction jobs in Arizona.
I think this is going to be a great opportunity for Arizona's economy. These are blue-collared, skilled jobs, which we need more of.
Yeah, and it's part of this ecosystem and momentum that we're getting in Arizona that we're seeing that is driving continued investment. And that's what you start to see. And unfortunately, or fortunately, one of the kind of the laws of nature and capitalism is areas that are thriving, they thrive more because more people come in, more companies want to jump into that.
Yep.
Now you get these types of dollars from the government, and that just adds to the momentum.
Well, and I think one of the things we touched on right at the beginning there is it's amazing what can happen with government support in different areas. The U.S. Secretary of Commerce, Gina Raimondo, she set an aggressive goal for CHIPS program that America would produce roughly 20% of the world's leading edge chips by the end of the decade. With that kind of support, growth can happen substantially faster than without it. So that support financially is such a huge drive for how we get jobs here in Arizona.
Yeah, there's no doubt this has been driven by the public sector, not just the private sector. And now as we get into the election season and nearing November, and we're here in the purplest of purple states, the Biden administration has a lot of TV ads and ads that I'm seeing that are talking about the CHIPS Act, that are talking about the Inflation Reduction Act and how that's driving growth to Arizona. So we are agnostic here. We're not going to talk about politics. We're agnostic when it comes to politics. What we're talking about is the impacts of decisions that have been made and where Arizona sits. So whether you like the current administration or not, they're trying to definitely take credit for this. And in an election that's going to be close, they like putting their stamp on it. And we'll see how that plays out. One related story that came out from 12 News here is that New Valley Industries that are expected to bring a wave of new workers. How does Phoenix plan to house them? And this gets to the next point after all these jobs come here. We've already been in an area where we see about 100,000 people move to the Phoenix Valley every year, and I think that's going to accelerate now with this new semiconductor ecosystem. So this article is talking about how there's some apartment developers who are really focused on the affordability side, especially around the TSMC plant up in North Phoenix, that they're building apartments that are going to be more affordable, because most new apartments as they come out of the ground and they're planned, they're Class A. They're more expensive relative to older apartments, but this company is they're planning this, the Reserve at Thunderbird has affordable housing for 108 families. And these are very affordable. Like, these families prior to this were homeless. So you can't just focus on the high end, and it's good to see that we're going to continue to see some new housing that's going to be affordable.
Well, and I think one of the things we quickly forget is when we talk about all these new jobs, a lot of them are blue collar workers. We're not talking about luxury apartment people that are coming to work here. We're talking a lot about blue collars, and finding affordable housing is going to be such a key asset for finding workers to come here.
Yeah, there's a good mix, because there is the higher paying group, but along with that, you have a huge new facility there, which means maintenance, cleaning, the lower paying jobs, but just that come through that ecosystem that need to be supported there. For example, and this is kind of related, when the Phoenician was built, there was not enough housing for all of the support staff to live around there that was affordable, cleaning, maintenance. And so the Phoenician participated in some affordable housing close by, so that folks didn't have to commute 45 minutes or an hour to get to work, because where the Phoenician is a bit more expensive. It's a similar thing that needs to happen is you're building this ecosystem. There are going to be the high-paying jobs, but you have to support the whole structure.
Have you guys driven by the plant recently?
Been a couple of months, but it's like a city out there.
Yeah, I grew up 7 miles south of where the plant's located, and I was out there last week, and it's just crazy to see all the apartments going up on the east and west side of the I-17. Because when I was a kid, it was just desert in each direction. So to this article's point, we're starting already to see all these new developments going up, and especially affordable developments.
One of our most popular videos online is when we talk about the TSMC plant. It's very controversial in Arizona. It's not just, new jobs, new development, new capital, and everyone's excited. There is another side of this, and you do get more negative online in general, and I do think that overall the public is very supportive of this development, but there's always that other side that they don't want to see the desert turn into a big factory city. But that ship has sailed. It's being built here, and the folks who continue to live here, we get used to the fact that we're in an area where we're going to see that migration and that growth. As we look at how you house all the people who are moving to Arizona, we're excited to see that Arizona's tallest apartment tower is finally on track to start construction.
Finally.
Ooh.
For some reason, there's always this competition among developers as who can have the biggest tower. I don't know where that
I
comes
think
from.
that's a very archaic, maybe.
But it is a never-ending competition of who can have the highest tower. So this developer, which is the Empire Group in Scottsdale, really successful group, and they have Aspirant Development, which is their development arm. They're going to be building the tallest tower in Arizona. It's going to be taller than the Chase Tower, which is currently the tallest. This is going to be downtown, Roosevelt and Van Buren and 2nd Avenue. And I'm just going to, as we always like to look at, give a little review of the rendering. So if you're watching online right now on YouTube, you can see the renderings. This building's pretty cool, and I got to give them props for these renderings, because as I see this building, I'm like, it's very futuristic. This looks like 300 years away. And there's going to be 2 towers. This is a huge development. It's going to be built in phases, but you have a really cool glass facade, and then in the middle, it kind of looks different with a little bit of wood within the glass. They're slanted. They're kind of sloped up. They do remind me of the towers that were built as part of a big project in New York when I was there and I saw them go up. Hudson Yards development kind of looks like that, but as we look at the different angles, if you look at the street view here, this really takes Phoenix to a different level. And, Phoenix is growing up. And if you look at this and you see as this comes online and you look down the road in 10 or 15 years, this is what Phoenix is going to start to look like. The core continues to thrive, and this is where this building's going, right downtown, and will continue to be the kind of the footprint of the city, the most desirable place for all the activities that go on. And now this, huge tower, this is going to be built in 2 phases, 690 apartments, 250 room hotel, 36,000 square feet of commercial space, 185,000 square feet of office space, 1,200 parking spaces on 2 acres. So
Wow.
a lot of people build one house on 2 acres where I'm from in Idaho. And so they're doing a lot with these 2 acres.
Yeah, I hope developers get competitive. To your point, this is a catalyst. This is the start of what could be something amazing in 10 to 15 years. But I want to see more developers coming here and just having a architecture build off. Let's see how many cool buildings we can get here and how high we can go.
Yeah, I agree. For so long, Arizona has been, let's just build as fast as possible.
Yep.
And cookie cutter and browns and just go, 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 go. I'm the same as you. I'm happy to see just some cool architecture. We need to keep pushing that so that the city doesn't just go for a quantity. Instead, we get some quality buildings around us.
Well, and on the second tower that's included in this, one thing I found really interesting is they're going to do 290 urban suites. It's a new term for co-living spaces where several residents share common spaces like kitchen and living room, but have their own rooms. I haven't really seen this design
Kind of like
before.
student housing.
Yeah, it's kind of like we're bringing back the dorms.
Yeah.
So I don't really think I'm dorming with other adults. That's kind of weird to me, but I'm sure there's going to be a market of people who want to do this.
Well, that's totally driven by affordability.
Sure.
So if you're single and you're in your 20s, 30s, now if you're an 80, now if you're a 60-year-old guy and you're co-living, that's probably going to be a little interesting. But
this is like a sitcom waiting to happen.
Oh,
like Friends,
yeah.
New Girl.
Well, it's funny. You do it as a student.
Right.
And then you kind of go get your own space. And then when you get old, you do it again in the nursing homes.
retirement.
Yeah.
And it's cool because now you're connected with all your homies again when you're old. But there's that 40, 50 years there where you're supposed to go do your own thing, but they're trying to bring it back.
Maybe they split the clusters by age range, just put a lot of people in the
That would
same
make
age range
sense.
together. Yeah.
I have a friend that lives in one of these types of co-living spaces now and likes it. Moved to Phoenix, didn't know anybody, was able to have an instant group of friends.
Yeah.
They have yoga. They have some co-work spaces on site. So it's definitely a community, and I love seeing those types of projects come in because for a place like Phoenix, it's always kind of been a place for families, a place where everyone's pushed to go buy a house, move out to the suburbs. Having some of these more urban things really adds to our overall community. Renting will be cheaper than buying for a long time. Lack of inventory, high prices, and falling pressure on rent growth makes owning more expensive. This is a trend that we have seen over the past couple of years. Post-COVID, right now, we are at a place where the disparity between owning and renting is higher than it's been in 40 years. Over 50% more costly to buy a property than to own that similar, or than to rent that similar property. It doesn't look like that's going away anytime soon, according to this article and analysis by CBRE. And they say that even though the premium to buy a home may come down over the next several years based on the home price, interest rate and rent growth forecast is expected to remain high enough to keep today's renters renting for longer. Even though there should be a little bit of pressure coming off of owning a home as interest rates come down, it's going to last a while before it makes sense to buy a home, before it costs the same. And I remember growing up, it always costed about the same to rent versus owning. Then you have some tax advantages to owning, so you'd kind of be pushed that way. Now, it's not even close.
Well, and then a lot of people that own homes now are locked in at such great interest rates. They're not going out to market. Just the supply is so much smaller than it usually is because of those.
To your point, people who are locked in with these low rates, if they're going to sell, they're going to sell at a premium. So if rates come down, I don't see the price of homes coming down at all. If anything, they're going to skyrocket even more. So the folks that want to buy a home, stay tuned.
Yeah, there is a frozen supply that's going to be frozen for a long time because of these low interest rates. Just think about all of the people you know who own homes that have interest rates in sub 4. And they're thinking about things different now because they have that sub 4. I was talking to a friend over the weekend. He had a home sub 4 by himself. He got married, wanted a bigger house, but he had a loan sub 4. So normally he'd just sell that. But he's like, I have a 3% interest rate on it, so of course I'm keeping it. I'm renting it out.
Walk away.
Yeah.
Can't walk away. So you think about it completely different. It turns into more rentals, more people holding onto those homes longer, less inventory. It isn't necessarily a good thing. We're not saying that. We're just saying it is what it is. We can't, let the trend be your friend instead of fighting it. Understand it, what it is. And that's why, as owners of multifamily and developers of multifamily, we see this rise of the forever renter and how that's going to continue to be a trend. And that's why I have confidence as a multifamily investor that this is a great place to invest because that trend is going to just continue for some time in the future.
Yeah, and as a millennial, Gen Z, even younger generations, why wouldn't you rent right now?
Yeah.
You know, it's all the amenities in the world. You can go live in a nice area and pay less than what you would pay on a mortgage for a home that's not as nice as the place you'd be renting. For me, it's a no-brainer.
And I, as a homeowner, last summer, I had a 2-year-old AC go out $10,000 later. Thankfully, we have a little bit better connections at Neighborhood Adventures,
Yeah.
but I priced it out with a regular place, 10 grand. You don't have to deal with that when you're renting.
No.
You just call someone else to deal with that when you're done.
So it makes a lot of sense, and you have the flexibility, and you see these new apartments that are coming on, including our apartments when we renovate them. Typically now you have in-suite washer and dryers, you have new nice furnishings, you have nice dog parks.
Yeah.
I don't have that at my house. I have to pick up my own dog poop. I have to mow my own lawn. You
Well,
don't have to worry about that.
Still got to pick up the dog poop at the dog park.
Yeah, you're supposed to.
I think one of the things with that too is a lot of people that would be in the market to buy right now, they have this money tucked away to go, put a down payment on. It's extraordinarily expensive to go buy a house. So they're finding ways of deploying those funds temporarily into investments, into the stock, into multifamily in order to deploy it. So it's not just sitting in a bank, waiting a couple years and then coming back to the market and seeing where it's at.
Yeah, companies like ours have benefited from that.
For sure.
Because younger folks have more cash sitting on the sidelines. They want to do something with it. They can get exposure to real estate by investing in our REIT or in some of our projects. Things change, and so that's where we're at today. Now, specifically talking about some of the bigger trends with multifamily and what we're seeing, capital constraints are now pushing what's called a forced pause with multifamily development. So when you're looking to build a project, you always look at what your cost to bring in the capital for that project would be. Let's just say the project's $10 million. You need to get that money from somewhere. Typically, you're going to get a loan on it. Maybe you bring in a few investors. But the cost of the loan has gone from 3.5 to 7.5 or higher. And construction lending is even higher than that. And then construction loans in general, the terms have become adverse to building. So these capital constraints are now really putting a damper on new multifamily development. So if you see some multifamily projects being built around you, those were planned 2 years ago when interest rates were 3.5%. What you'll also now start to see is lots that were planned for multifamily building that those projects are not going to get started. And this article talks about how this forced pause, as traditional lenders have now withdrawn from that whole marketplace. And the other thing that's important to look at here is that the cost of materials to build have gone up about 50% over the last 2 years. So that's a dramatic increase, and in some cases more than 50% to go build that project. I was talking to a friend of mine who's an apartment developer, big-time apartment developer over the last 30 years, and they're deciding that right now is the time to buy versus build. They're going to go buy assets that are existing simply because the financials are way better. Because if you go build, there's a lot of risk to that, and the costs have now really increased to go do that building. But if you can go buy a nice piece of real estate, you can hold it, you can manage it, maybe do some value add, spruce it up. That's what they're doing because of these capital constraints.
I think a great example of this is right behind us. They tore down a school right here next to our office space to build apartments, and the project was dropped because of the costs became too high. So they demolished the building. It's just this flat piece of land right next to us, but there's not a person out there wanting to build on it yet because of the cost itself.
Yeah.
And this also has a broader impact. So as apartment starts begin to plunge and go down, so that means new construction of new apartment units coming on the market. This has a big impact in the biggest driver when it comes to real estate values and rents, which is supply and demand. The last 2 years, and I'm going to include 2024 in that, so last year, 2023 and 24, in Arizona, we have a lot of new construction units coming on the market. Last year, we were number one in the nation with over 20,000 units coming on to support the growth in Phoenix. This year, it's probably going to be similar. We're probably going to lead the nation 2 years in a row in Phoenix. But as we look at 25, 26, 27, the new construction is going down, but the demand is staying really high. There's no slowdown in the demand. In fact, all the stuff we're looking at with all the new plants that are being built here, that demand is only increasing. So when demand stays high, supply goes down, price moves up. That's what we're going to see right now. So if you're an apartment investor and you're an investor in general, as Wayne Gretzky, the great hockey player, not so great investor, has said, you go to where the puck is going, not to where the puck is now. So you have to look at where that puck is going, and where we're going over the next few years is the supply of apartment units across the country and definitely in Arizona is going to start to really go down because of these high costs of borrowing. So this article talks about apartment starts begin to plunge in March and talks about why. And a lot of that I already touched on, but multifamily went down 20%. New apartment starts went down 20% in March over a year ago. And new single family homes were down 12% over a year ago. We're going to continue to see this downward pressure on supply, and that's not good when you're looking at the supply available to keep prices steady. Rent prices are probably going to be moving up over the next few years. No, that was cool.
That was perfect.
We need to start collecting the bloopers throughout the year. And put that together.
Yep. What's the word that you said that everyone gave you too much crap about? And I said it afterwards and nobody cared that I said it.
Well, it wasn't a reel that was boosted.